Can we just talk about black swans for a second? And I haven't read the book, I'm going to be completely honest, although I've got what they are. Are those factored into any of these models? How are leading companies thinking about these, one-off events? And maybe they're not, like you said earlier, that if you looked at a chart, you plot them out, you'd see there's more activity now. How do you look at black swans?
Look, at the end of the day, if anybody tells you they can forecast 100%, it's just not. It's not possible. It's simply not possible. Nobody could have predicted Japan or Chile or the financial crisis or Greece or any of these aspects. But what we've tried to do is, and I think this is the best that you can do in a lot of those situations, is to retrospectively go back and look at what happened with specific events and look to see if there's any trending or commonality, any what we call correction factors. So when we build out a forecast, we have a view that says, okay, here's where actuals are, here's my model, and I back test it to make sure it fits to that, to make sure my model works, and it would have predicted prior events. And then I forecast out in future. But before I forecast out in future, I go back, and as I'm back tested, I look for significant variances from where the actuals were. And those variances are usually because of one-off events, of things that have happened, macro events or otherwise, that have thrown the numbers off. And then you look at that, you look for some sort of a trending to say, okay, is there a percentage correction factor that we think can be applied to an earthquake or to some sort of other event that might have taken place? And as a result, or an oil embargo or some such event that happens, like a political crisis that results in oil prices spiking or whatever it might be. And if you can apply some sort of a correction factor, it gives you a better path forward in terms of understanding how my prices might react to it or not. So there's no silver bullet, as they say, but there is ways to get better information to understand exactly how I should be reacting to something. And is that change a fundamental change, or is it not a fundamental change? Is it a short-term temporary event? Right. And I think that's really where the fundamentals come out. If I'm a diligent student of that particular science, then I'm in a much better position to react to one-off events, to say, this is really a fundamental change and we need to rethink the way we buy this particular commodity. Or, no, it's not, it's a temporary shift and we're gonna be fine over the coming months and on from there. So that's kind of how we look at this particular issue.